Hi guys, welcome to the channel. My name is Dave, and on this channel we talk about wealth creation. Today we're going to discuss options. We're going to start a new series, and I'm going to start walking you through. So today we're going to show a live example of how I utilize options. And with that said, we're going to get started. Please like and subscribe if you like any of this information and you find it helpful. That really helps me out. So let's get going. Whoop. Hi guys, welcome back to the channel. Today I wanted to go over a option purchase with you, actually show you one live here on Etrade. So there's been a lot of discussion about options, and I think that people are really fascinated by options right now, but I don't know if they fully understand the power of options or the how it can drain your wealth. So here we talk about wealth a lot and trying to build wealth, and I use options as a way, almost as a separate income stream away from my normal, holdings and long-term holdings that I have in my stock portfolio. So I have an options trading account that I solely focus on that, and I'm typically focused on selling premium, right? So selling puts and calls, not really buying options, but selling them. So the target for today is Boeing. So, Boeing has had some issues recently. It did kind of break out here in November and recoup some of its losses over the last year. But it's been trending sideways for a while. It's got a little support down here, just under 190 or right around 195. And right now it's trading at 209.40. Okay, so if I go to look at Seeking Alpha, which is a great resource of information also, you can see that earnings were just announced on January 27th, so we've got a good window here, and that's something that I don't like to sell options and collect premium over earnings periods, because that can get you into a little bit of trouble too. So I kind of avoid the earnings windows. But so just as an example, Boeing. And the strategy that we're using, right, is to sell to open one contract February 26th with a strike price of 190. Like I said, we're trying to be conservative here. I want to get a nice, I want to get a nice premium collected. I want to target maybe between 10 and 18% annualized. And I just kind of want to sit back and hopefully never own the stock. That's the goal, collect the premium. I don't necessarily want to own the stock. But with that said, I only buy good stocks. So like Boeing, I consider that a good stock. If I buy it at 190, I'm not upset that I own it at 190. I feel like that's a decent price for Boeing at this point. So we've already done all that research. So again, back to just an example. So I am a put seller in this case, right? So what you see here is selling one contract, which is 100 shares on February 26th, and if it gets put to me at that date at $190, I'm going to buy $19,000 worth of stock. So it's not for the faint of heart. It's not for brand new investors. This is a strategy for those who accumulated some wealth and have this and want to kind of use this as a way to have some income coming in. Now, with that said, too, you're going to pay a lot of taxes, right? So we'll go over all that. This is kind of an introductory video to options. And selling options. So I typically stay away from market orders, and I like to do limit orders. So in this case, it's been trading at about $115, and the last trade was at or at $1.33. So for me, I'm looking for about that $1.15, and I would be happy if I get a little bit higher. That's fine. At that $1.15, I've already calculated my annual return to be about 12.5%. So I'd be satisfied with that over the next 3 weeks, and I'll keep it rolling into something else. If Boeing drops a little bit more, I'll buy a little bit more. We'll talk about that more later. So again, just an example. So let's go ahead and put a limit price in here of that $1.15. Good for today. So if this executes, I'm going to get $114.48. That's mine. I get to go pay taxes on that, and then I get to keep the rest and go have a nice sushi dinner, okay? The estimated commission is 50 cents. So let's preview this order. And we see here, okay, everything looks good. Ready to place our order. Place order. And then with Etrade, you can go find that order under accounts and orders. So you can see that it has already cleared, so it's been executed. So with that said, we're going to jump over to just a spreadsheet, and I can kind of show you exactly how this went down. So stay tuned. Okay, so the transaction did occur. It went through, and I verified that I collected $114.48 in premium. That'll hit my account today, probably be available tomorrow. So this is a spreadsheet that I like to use just to kind of keep track of everything. So we've got transaction numbers. This is the week that we're on. I track everything by week. This is the date I purchased it, the number of contracts, ticker symbol, expiration date. This is the price that it was at when we purchased this one. I sold this a put at 190, so it's 9.317% away from the strike between the 209 purchase and where it's got to fall to 190. So almost 9.5%. So I like that spread. That's pretty good. Collected $114. Now the put call cost is, that's money that I need to have in there in that account so that I can do this. Otherwise it would be naked, and I don't really like that. I like to have everything covered. So I have money in that account that's free, and it's sitting there, and it's tied up in this transaction. So that gives me a return of 0.6%, right? 0.6. Why are you fighting so hard for 0.6%? Well, I only have to hold it for 18 days, and that includes when it expires on a Friday and opens back up on a Monday. So if you annualize that, it's 12.2%. I do have to pay tax on this, and it's short-term capital gains, so that's pretty hefty. But I do like this as, like I said, an alternative source of income because it can be pretty steady. I think when you play these things and you do it conservatively, and buy good stocks or sell puts on good stocks. So that gives me, an outstanding number. And as I have these, because I always have about, honestly, I probably have 20, 30 of these cooking at one time across a broad-based number of stocks. So that gives me this outstanding put number, and that totals up over the course of that. So that's what it boils down to. I hope this is helpful. This is, again, stage one. I hope to have a few more on this that kind of goes more into depth what actually is happening when you trade options, and we'll talk more, and we'll show a little bit more of what I've been doing and why I'm a put seller, why I like that premium so much versus trying to guess and figure out which way the stock market's going, because I'm not very good at that. That's tricky. That's stuff I don't know. So I hope you enjoyed this. If you have any questions at all, holler down below. Please like and subscribe and blah, 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 and we'll see you next time. Thank you. Bye.